Back. Let's start another major area, interesting area for where we are in decision analysis. That is, what is relevant versus irrelevant costs. Okay, so basically, relevant cost. So, the chapter is relevant costing. Now, we understood cost in uh, many ways, like in golden management accounting rules, correct? Um, that is fixed cost, variable cost, etc. Now, another interesting area is relevant cost. So, in this relevant costing, for a present decision, whatever decision in the hands of the manager, it is called. Manager should think about only two things, that is, among the data I have, some costs are relevant that I need to consider, some costs are irrelevant that I need to ignore. So, but first of all, simple understanding of relevant cost is relevant costs are those that are one, incurred in the future. Next, that differs from given alternative. Third, that impact or affect current decision, that impact current decision. So, three criteria must be there for a cost that is going to be called as relevant cost. Any other things are irrelevant for the decision we are going to take. They must be incurred in the future. They differ from the given alternative. They affect my current decision. For example, your company is thinking about upgrading or replacing the old machinery which was purchased 10 years ago. So, small example, current decision we have to take. Decision on the manager's hand, the manager's hand is to replace old equipment. Now, you are in the meeting, production manager is there, maintenance manager is there, purchase manager is there, your accountant is there. And they are giving you a lot of data. So, new cost, new equipment cost, new equipment purchase cost, purchase price, etc. is $50,000. Everything included. Um, Old equipment carrying value in our books, it is, let's say, 10,000. Old equipment purchased 5 years ago and its cost 25,000. Alternative 1, alternatives, existing suppliers, existing vendor of old equipment, exchange old equipment exchange value. That fellow is offering exchange value dollar 3,000. And this is, let's say, alternative 2. Alternative 1, you are going for new equipment. Okay. And exchange value, but that fellow is charging for replaced equipment is telling new. According to him, that's the new technology. This one from directly, if you buy from another vendor, this is existing vendor. Replace equipment with new. That fellow is telling 37,000. Now, if company sells old equipment to outside party, and they get $8,000. So, like this, lot of information. Totally. Which one I should consider? First of all, I'll put it into two buckets. Okay, the correct decision everyone talking about, and they're asking my inputs, my recommendation, because as a finance manager, we have to give a recommendation to, then they will take it up to the big boss. First meeting is with you. Now, Relevant costs are those that are incurred in the future. If I buy, if we buy from the another vendor, yes, this is relevant cost. If in the future, if I go with the current vendor with the exchange offer, this will become relevant. If we only sell old equipment, in the future, all these things are in the future. Wherever if, so this is relevant. Why I should worry about what happened in the past? Its book value, existing equipment, book value, its purchase cost 5 years ago. These are all irrelevant. I should really not worry about that. Now, first satisfaction. First category is what? First criteria incurred in the future. I'm only will consider those. Next, it should differ from given alternative. Alternative 1, alternative 2, new vendor, existing vendor, offer price. New vendor, if we go with the new vendor, 50,000 I had to budget it. If I go with the existing vendor, 37,000 minus 3,000, that fellow will. So it will be 34. And how much it differs? Differential cost 16,000. This is relevant. So, among the heap of data, your information you are getting it, what matters to me? What is going to happen in the future if we take the decision? Decision is replacement. Is the replacement is going to buy new equipment from new vendor? That fellow will not take the old equipment. So 50,000. The existing vendor is quoting. Okay, the old vendor existing. This is my equipment. If you buy from me, 37,000, but I will exchange it. I will remove everything. I'll take my existing equipment. I'll give you 3,000, 34,000. Now, another alternative is there. If the new vendor is not taking the item, we are going to sell ourselves minus disposable value. How much? 8,000. So actually 42,000 and 34,000. This is what matters to me. Or 16,000 minus 8,000. So net differential, net cost for me is 8,000. At the end of the day, this is what matters to me. Other things are all 5 years ago we purchased at 25,000. Now it's book value with my books. Carrying value. What is carrying value? Cost minus accumulated depreciation. We purchased 5 years ago 25,000. Its accumulated depreciation is 15, so carrying value is 10. It is in my books, it's happened in the past to finish. Irrelevant, I can't change that decision. 5 years ago, they took the decision. Now, why I should bother about it? This is the criteria. Simply getting into a lot of confusion. Using relevant costing. What matters to me is the three criteria. One, all those things should happen in the future, should be incurred in the future. It should differ from among given alternatives. And it is impacting my current edition. Now 8,000 is impacting my current edition, isn't it? Now we will take up to the management, big boss. What the big boss decides? Our job is to recommend. Big boss may go for alternative 1 or alternative 2. And when your boss says no, let's maintain cordial relationship with our existing vendor, then we are going with alternative 2. And as a finance manager, you should be ready for paying 37,000 and deducting 3,000. If your boss is telling no, finish, now the technology has changed, new vendor is offering 50,000, the new equipment is very good, it's technologically up to date, I don't mind going with the new, let's go with the new equipment. Now, as a finance manager, you should be ready for shelling out 50,000. It's up to the management, and they will take decision not only on these financial recommendations. I told many times, non-financial considerations. There are so many alternatives for this. Your boss would like to say, okay, still the old equipment is having some useful life, let's not sell it. Let me take it out, put it somewhere else, and whatever I can make the parts from it, let me make it. These are all engineering decisions. Your job is to come out with correctly, nicely, executive summary, not to confusing your bosses, telling them what they really, quickly they will take a decision. So the term relevant cost is not necessarily for the costs only. It is for revenues also, it is for cash flows also. We don't say relevant revenue, relevant cash flow. No. Relevant costing is one term, but that includes cost that incurred in the future that differs from the alternative that impact my current decision. It also includes relevant revenues, revenues made in the future, revenues that differ from the alternative, revenues that is going to be impacting my decision. When we talk about cash flows, relevant cost also includes cash flows to be made in the future, cash flows that is coming in the future. Cash flows differ from the alternative. I am interested in only in cash flow. In section E, you will learn that investment decisions. I am investing now so much. What I am interested is only relevant cash flows that are going to come in the future. The message here is management time is very, very important. Your accounting, you also don't have time, and relevant costing. Later on, we will use lot of. There are 4 application areas. I said these are the simple examples we will do tonight. Uh, at the end of the day, this is what matters. Now, another thing, if I extend, new vendor will tell you, now this is also a little bit, new vendor will give estimation that is by using new equipment, their new equipment, company can save dollar 75,000, or they will say you will save variable cost per unit dollar 2 every year till its useful life 10 years. So new vendor will write, you will see that in the technical literature prospectus, they will leave that variable cost per unit to calculate you because they don't know your variable cost. But they will say, if you use our machine for the next 10 years, you will be having this much per unit of savings. That is also matters. Right now, if my variable cost per unit from the old machinery is $5, by going to the new machinery, I am going to save 2 out of 5. So these things gets extra. Here I am giving you example of 50,000, 40,000, 300. But think about companies investing in a machinery is worth billions of dollars. You will not take decision just like that. You will analyze. You need all this before going to your boss, purchase manager, production manager, maintenance manager. All those in their minds, you should extract those information. At the end of the day, put it in 2 buckets, whether it is relevant, whether it is irrelevant. Then go with your recommendation. So, there are so many terms for relevant costs. I already used one word, differential cost. When we go to marginal costing, marginal cost or additional cost, in section B, and many times I explained even in section A, opportunity cost. Opportunity cost is also relevant. What is opportunity cost? Definition. section A, section B. I if I remember, you can check the recording. I discussed this 10 times. Define opportunity cost.
So using the best alternative foregone
Hmm.
is the opportunity cost.
You're almost there. Anyone? Hmm? See, this is the lack of catching up. Sometimes I'm off, I'll send you particularly message. Please, if I'm not coming, study, continue. Opportunity cost is sacrifices made, benefits lost by choosing one alternative over another. In section A, when we discussed accounting profit and economic profit. In section B, cost of capital, owner's cost of capital. That is also relevant cost for owners. They have sacrificed by investing somewhere else and put that money with you in AR management, in money market securities, in inventory management. What matters to us? Had the owner invested in somewhere else, he would have earned 6%, 8%. Right now it is stuck in AR. Right now it is stuck in inventory. 10 times we discussed. Maybe this is 12th time. That is also relevant for CEO. Opportunity cost is relevant. They keep in mind not accounting profit, economic profit. That economic profit is nothing but considering this opportunity cost, which is popularly, it's a popular term in under relevant cost. Hmm. Then opportunity cost is also said economic cost, we just also. And sometimes implicit cost. Then beautifully, it's also called avoidable cost. Avoidable means eliminated, saved costs by not choosing one option. In golden management accounting rules, I said variable cost we incur only when there is a production activity within that relevant range. If we are not producing, we are not incurring variable cost. That is avoidable cost. We're going to save. Okay. Uh, Somewhere else we talked about it, but I did not use avoidable. I said saved by not doing particular action. Now, what is irrelevant? Okay, irrelevant is past, past incurred cost, and it is also Sunk cost it is called. Now, in this green, I said irrelevant. These two are irrelevant. Yes, in that 25,000 is called sunk cost. Both are irrelevant, but book value, carrying value is irrelevant. Purchase cost, past cost is irrelevant, but past incurred cost, technically it is known as sunk cost. Sunk cost, under irrelevant sunk cost, past cost. Then fixed cost. When I explained fixed cost, I said what? It's a VIP cost. Before committing, you should be careful, I said. So, committed cost is irrelevant. Then against avoidable, unavoidable. Unavoidable costs are irrelevant. Oh, what is unavoidable? Irrespective of our decision, some fixed costs are going to continue. You will study those in application areas. In the add or drop segment, etc., you will study. So, sunk cost, common cost, unavoidable cost, past cost, even they say allocated cost, shared services cost. For example, your receptionist cost is a shared cost. Receptionist is taking care of everything, communications. Whoever guest comes, she or he is receiving, like, imagine a hotel, 5-star hotel. There's a receptionist in the lobby, welcome desk. For any decision, for room service, guest service, whatever you try to please, extra cost for the guest experience. Why you are bothered about that lobby costs? They're all fixed. Shared cost, they're all nothing to do with your decision to upgrade the room for your guests. When you upgrade the room, you should bother? Okay, this upgradation costs, that extra. These customers are my repeat customers. They are repeat guests. They are coming, checking our rooms, and now from standard room to luxury room, I am upgrading. Then what is relevant? In that upgrade, I am losing the money, losing the value, but guest experience. Standard room costs 40,000 per night, 20,000 per night. Deluxe room costs me 30,000 for the company. But guest experience is important. I am upgrading them. Please go and stay in deluxe room. So 10,000 I'm losing, but that is what is important. Why you are bothered about the receptionist cost? Common cost, they're all common costs. Shared cost. Not only they're taking care of guests, but they're also reporting to general manager. No, why you are bothered about lobby cost, reception cost in the five-star hotel when you are upgrading the guests? In airlines, what matters? What doesn't matter to satisfy customer? Ground staff cost, that receptionists, like a uh, one who gives boarding pass, ground staff, they're all working, taking care of customers, but they must be there. They must be there. We are paying them. They are commonly taking care of all the, whether it is economy class passengers, business class passengers, first class passengers. They should be there. In that, they're all unavoidable. But in that, maybe one staff you want to reduce. One staff reduction cost is relevant, not nine staff. Before there were 10. Now your business class is not getting filled. So you try to reduce one. So that is relevant. Simply bothered about all 10 people cost. No. What matters to be avoidable is one person. That salary, that cost is relevant. I should not total 10 people cost and try to save anything. That's not correct. 9 people will continue irrespective of my decision to service the business class people. They're all common costs. Like that, you can, any business, not only manufacturing, any business now. I told many hotel, I told airlines, I told hospitality industry. In this training industry, with whom you speak, the coordinators and other things. For the institute, their cost is irrelevant. Whether they take care of these 20 people, other 20 people, they are there. What matters to the institute? Balasar cost. Another faculty cost. That's what they were in. My cost is relevant. Consultant. Other faculties are there, but their costs are irrelevant because they do revision sessions with you. They're all paid or fixed. They go to colleges, they go to. That is irrelevant, no? For this batch, classic example I'm telling you. For this batch, night batch, what matters to the institute management? Only cost is the relevant cost. They might have paid to Zoom. That is irrelevant. In this Zoom, they conduct many classes. Are you all getting it? Are you all getting it, Dibya? Getting it? Yes. Everyone getting into this? What matters to them? It doesn't matter about other junior faculty, etc. Since I am a consultant, I conduct this batch. That's it. My cost. I take care of this, I take care of other clients. Okay, so that's what matters for them. Permanent employees who is servicing this batch, they are there. Whether this batch is there, whether the other batch is there, they are there. They are unavoidable. Your coordinator, your revision teachers, they are paid. They are paid monthly. They are there. Are you all getting it? So many examples I can speak. At the end of the day, I am repeating, at the end of the day, what matters is, as a manager, I should be concerned about these things. There are so many other terms I gave you sample. They will be used in a different context when we go to the application areas in relevant costing. There are 4 application areas I gave. Wherever we go, we use different terms. Okay, I'll give you a list also in my thing, but right now I don't want to give because with the demonstration we can see some questions. Demonstration we can see. For example, go ahead, Shreya. Go ahead. What is
What is the relevant cost of purchasing the building per month? You're planning to open a local restaurant and you're considering whether to buy or rent your facility. If you rent, you will pay $2,500 in rent, $1,300 approximately in utilities per month. You will also be required to purchase a renter's insurance costing $350 per month. All maintenance fees on the building and landscaping, however, will be provided by the property owner. If you buy the facility, your mortgage will be $1,800, utilities $1,300 per month. Your property insurance will be $600 and expected maintenance cost $1,000 per month.
okay? What is the relevant cost of purchasing? So, it's a beautiful example. You're planning to open a local restaurant or boutique or whatever, some business. You have 2 choices. Alternative 1, to buy or rent. This is alternative 1, purchase. Purchase the facility and start the restaurant, or you rent the facility and start the business. Now they are asking for purchase. If purchase, if rented, okay. If you rent, if you buy, purchase, buy, mortgage on loan, you're taking loan and buying, purchasing the building, mortgage 1,800 per month, all this per month, they're asking per month. Then utilities 1,300, insurance 600, maintenance 1,000, If you rent and start, rental of the building 2500, insurance utilities 1300, insurance 350, maintenance not applicable 0. Now coming back to question, here this column, what is the relevant cost of purchasing and incurring these costs and starting the local inn? What is the relevant cost? How to answer this? Two things at least in your mind. Incurred in the future if we purchase. Yes, they are all incurred in the future. It should differ from the alternative. Alternative is rent. Yeah. What's the relevant cost? If you want to, I will do total and leave total. How much total?
4700.
Here also, let me finish table. How much here? 4150, right? Yes? Hello, getting it? Yes, table is complete, data is complete. Now, what is the answer? I've done everything. It's with you now.
The
Only Shreya is answering. What is Shreya is talking? What about others? I have put all the data, total it also. I am asking simple question. What they are asking? What is the relevant cost of purchasing the building and starting the local restaurant? 40 minutes I explained the relevant cost. Come on. Pratiksha, Sana, Janvi, Vaibhav. Sachin, Reno, Rashmi. If you don't hold this in your grip, no, relevant costing will be nightmare. I'm giving you a lot of examples and then I'm showing you this question. 45 minutes I talked about from different angles, different examples. And I repeated that what is relevant cost. Divya, why silent today, everyone? Shreya, what's the answer?
Sir, according to me, as they are asking about the relevant cost of purchasing, which means buying the building, so we need to sum up the expenses over here, that is 4700. So maybe the answer 4700.
For your information, answer is not. That means whatever 40 minutes I talked, if you just sum it and say that is the relevant cost, then either 40 minutes I talked wrongly or you are not catching it up. 4,700 is a total cost. Total is irrelevant. I said what? Yes, 4,700 will be incurred in the future. Yes, but what is the other criteria? Relevant costs are those that should differ from the alternative. Which is common here in these two tables? Which is common? Whether you purchase, whether you rent, which cost is common?
Maintenance.
Which cost is common in dollar amount? You are going to spend same amount. Which one?
1,300.
1,300. Right? That's not differing. That's not differing. Whether you purchase also, utilities will be 1,300. Whether you rent also 1,300. It is not differing. So 4,700 minus 1,300, 3,400 is the relevant cost. Relevant cost of purchasing. Similarly here, relevant cost of renting how much? 4,150 minus 1,300, that is 2,850. 2,850 is relevant cost. Cost of renting. Total cost, totality concept. If we just add it and total it, no. What is the second criteria? That should differ from the alternative, which is not differing. Utilities is irrelevant. So, utility is cost. This is irrelevant. I should not worry about it. Simple. If I purchase and start the local restaurant, 1,300 per month utilities. Same thing if I rent it and start. That is irrelevant, calm. It is not differing. It's same. Now, relevant cost of purchasing and starting the local restaurant, $3,400. Relevant cost of renting and starting the local restaurant, 2,850. Okay, so now this is alternative 1, this is alternative 2. Which one you recommend to your management? Which one you recommend to your owner, or you only? Which one you prefer? Which one you prefer? Simple, two numbers. Which one you prefer? You are the one who is starting the local restaurant. Which one you prefer? What happened to all of you?
Alternative 2.
Alternative 2. Why?
Because of my cash flow.
Yeah, because it costs you less, right?
Yes. Yes.
So financially, renting is cheaper, right? Hmm. Renting alternative to is cheaper, and you will go with it. Yes, agree. I also agree. But this is based on pure financial numbers. Now, Dibya, please stay with me. I'll ask you one question through because nobody's talking to me today.
Mm-hmm.
I'll ask you. You will prefer renting and starting the local restaurant? Yes.
Right.
Financially, I am with you. Now, I'll ask you. How do you feel? It's a rented facility. One day you have to leave, correct?
Mm-hmm.
And you spent a lot of money on interior decoration for this opening restaurant, but it is not your building. How do you feel?
Yes, but that always given luxury to exit at any given time, right? If my business is not doing good, I can leave, right? Had that been I purchased it in my own building, if business doesn't go well in future, I can't leave, right?
You can change to another business. You
So
can
it's not that because I pay my the my cash
EMI.
flow goes up, right?
Yeah,
If
EMI.
I
No, but what I'm telling you is, in a when you take a decision to open a local restaurant, hmm, will you just take a
correct.
will you just take a decision like that? You will see the area, you will see the neighborhood, whether it is busy
Mm,
neighborhood, whether it is a prominent neighborhood. Yes, you have done all those things, right?
right,
And you have checked the competitors, they are doing roaring business. Yes, same line.
right.
Now, if you rent it and start it, maybe you agree rental for 3 years and you start it, there will be pain, no, at any point of time, because at the end of 3 years you have to leave. Yes, and
Yes,
you will have that pain of, it's not my building, correct? Correct, yes.
yes, but the opportunity cost is there, right?
What opportunity cost you are going with it? Only financial numbers.
Financial.
I'm talking about non-financial also matters. I'm telling you, for owners, non-financial also matters. At the end of the day, you spend a lot of money on interiors. Yes. Hmm?
Yes,
After 3 years, your owner will come, will give you 1 month notice. Please leave it as it is, because in the agreement, you should empty it and leave it. Demolition costs. Yeah, because your owner will
right.
say, I will give the same thing for other fellows, they are giving me thrice the rent. What you will do? Hmm?
Mm,
If it is in your own building, you will spend 3 times of your interior, right?
correct.
And the feeling with you, yeah, it is my building. In my building I have opened the restaurant, correct, no?
Correct.
Guest experience. It is
But
not
sir,
that.
the amount of risk, sorry to cut across you, but I'm saying the amount of risk is always there because it's a new business, right? I cannot guarantee whether the business will last or not, right? Let's re- s- I understand, okay, we did all the
No.
research, market research and everything, but still there is amount of risk
Yes.
because incurring if I purchase the new building and go for a business that I'm paying upfront, like a lot of cost. It's
Yes.
not only my fixed cost.
Yeah. Whatever it is, what you and me is discussing is also important when you take the financial decisions. These are called non-financial decisions. Hmm. Relevant costing coupled with the non-financial decisions you should recommend to your boss. Hmm. On the one way, you are right. On the one way, what I am telling is you will not open any restaurant without any market research, without how competitors are doing in the same line of business, right? Uh,
Correct.
all this in any city, what you do in that lane where there are a lot of commercial activity, everybody wins, no? Everybody doing roaring business. Somebody has opened veg restaurant, someone has opened non-veg, next to you is another one, next to that commercial street. In that commercial street, I don't think any shop will be only without any customers. Everyone is there. If you open in the interior, there might be problem. After doing all those studies, but what I'm telling you is, at the end of the day, the feeling that I'm not the owner, the feeling that even if I have a roaring business, I have to leave after 3 years, the feeling that the owner will come and vacate me will always be there, right?
Right.
Other side is also what you are telling is correct. What happens if my business fails? Here also, what happens my business fails? You have signed a 3 year rental, you have to pay 3 year rental. Like this, discussions can continue. But at the end of the day, yes, in the exam, in multiple choices, you have to take financial numbers. In case based test questions, more of a non financial things are talked about it. When you give recommendation to your business leaders, here we are talking about 2000, 3000. I keep on telling that when you are investing, when you're starting new business, etc., etc., there are so many financial considerations, non-financial considerations you should think. Okay, now as per financial, going with rental makes sense, but non-financial both way, all these discussions needs to be done with your business leader. The other thing now, I'll ask another question now. What is the opportunity cost of purchasing what's the opportunity cost of purchase in this number?
Renting is my opportunity, right, for purchasing. Instead of purchasing, we'll go for renting.
That's correct. Super. Opportunity cost of purchasing is $2,850. Correct? That is renting.
Correct.
Renting. Two alternative. One alternative I am giving up. Other alternative I am taking. So opportunity cost of purchasing means giving up on renting. Opportunity cost of purchasing is 2,850. Opportunity cost of renting
It's 3,400.
3,400 because I'm giving up on purchasing. Benefits lost, sacrifices made by choosing one alternative over another. All these things are relevant. Opportunity cost is a beautiful concept. Okay, next. Next. Okay, don't read this, don't get confused. This one. In a decision model analyzing this investment, what is the best option and its relevant opportunity cost? Come on, Shreya. Dandy ink.
Gantry Inc. has 5,000 obsolete test lamps that are carried in inventory at a manufacturing cost of $50,000. If the lamps are reworked for $20,000, they could be sold for $35,000. Alternatively, the lamps could be sold for $8,000 to a jobber located in city. In a decision model analyzing these investments, what is the best option and its relevant opportunity cost?
Okay. Had 5,000 obsolete that are carried manufacturing cost to 50, that is irrelevant. What happened is happened, irrelevant. Sunk. The manufacturing cost is a sunk, irrelevant and sunk. I'm not worried about. Now in front of me, what are the options now? If the lamps are rework, if rework, if rework, what happened? They can be sold, sale value 35,000 minus rework cost 20,000. Then another option is I can sell it directly. If direct sale 8,000, no cost. What is the best option and what is its opportunity cost? Now, not only Divya, now by this time people should talk. What is the best option?
So, to sell to a jobber.
Why?
So, because there is less cost over there.
Are you all seeing this? What is the best option? Once you tell me what is the best option, then what is its opportunity cost?
So, then it will be 15,000.
What is its opportunity cost?
That will be 8,000.
Financially, best option is rework because rework will give me gain of 15,000. Yeah, this is the best. But what is its opportunity cost? Yeah. Giving up rework, selling directly, I have a gain of 8,000. That's why I said relevant cost is gain also, revenue also, cash flow also. So, opportunity cost, uh, it's best financially go for rework and gain 15,000. But what is its opportunity cost? Yeah, I'm giving up rework if I go. 8,000 is my opportunity cost. Okay, why does it matter? Are we, is the management crazy? Are we crazy? Why we are going for direct sale? If you tell your management, boss, let's go ahead with the rework, that's what you're recommending, financial. Your boss saying, no, I will sell directly. That's why this question is to your boss. You have to answer your boss no. Oh, why your boss is not liking 15,000 gain? Is he really crazy? 7,000 extra, we get it. What happened to my boss? Like sometimes I ask you, what happened to all of you? You go with a recommendation, you did a lot of calculations. Any Fifth grader also will say 15,000 is good. Why your boss is telling, no, tell me what is the opportunity cost? You say 8,000. Okay, let's go for 8,000. My God, what happened to him or her? There that non-financial things in their mind. What is non-financial things? Ah, you have to take all those obsolete lamps, put it in one space. Use your workers. Some of the workers, they are doing production. You pull one or two workers, tell them to rework on it. Spending 20,000, accounting for them, debit. Then invoicing for 35,000. By this time is lost. You unnecessarily used the prime space which is meant for production. These headaches, too much work, too much using your labor time, they are producing it, you are pulling them. You are using the space not productively, just for $7,000 difference. Your boss will say, all this stop. I am not going for your. Take the items, put it in the scrap yard, call our regular scrap fellow who will come and take it. Take that 8,000, debit cash, credit, scrap sales, get lost sales. Because again, opportunity cost is important. Your bosses, they're all business leaders. You are an accountant, you're telling, 50,000 good, 50,000 good. But you should also be thinking like them. These are the decisions. Come on, wake up. This beautiful area. If you leave it out of the way, it will trouble you relevant cost. When I did my Indian CMA, relevant costing really troubled me. 2 pages of case study. In that we have to read, we have to identify what is relevant, what is irrelevant. Eyes used to burn to understand that concept. At the time, only institute material, that's it. In fact, I failed. Then, for me, somehow I was not taken that failure properly. Then I went to Chennai for 6 months. Tuition. At that time, no coaching, tuitions. And my teacher, Ukara, what is it? Where you are going wrong? He used to tell me. Relevant costing is beautiful, but if you mess with it, it will be a problem. Now, one last sample before. Okay, read. Which is some cost?
You're considering upgrading from your current inkjet printer to a laser printer. Your old printer costs $600. Print cartridges for the old printer cost $80 each, and print cartridges for the new printer cost $120 each. Cartridges for both printers last approximately 500 sheets of printing. Your roommate has offered to purchase your old printer for $50, which cost is sunk cost.
Sunk, dead cost.
Cost of old printer.
Old printer cost. That's it. You paid 600 and that's it. You should not, oh my god, I paid 600, I'm getting only this much. No. Yeah, you paid 600. Now your roommate is offering 50. You should not cry it. It's finished now. I paid 1.5 lakhs for this. So if I go to iPhone, they will give me only 10,000 now. That's it. You enjoy it. Cost of a new printer. If you go and buy the new printer, laser printer, this is relevant. If you buy. Cost of ink cartridges for the new printer, yes, relevant. Cost of the ink cartridges for the old printer. And both have a capacity to print 500 sheets. This is irrelevant. Question is, what is sunk? Sunk is the old printer cost. Because cartridges, without cartridges, one is inkjet printer, other one is modern laser printer. You need a cartridges. But the problem is, they have a both capacity, same capacity of printing 500 sheets. This new printer cost 120 is relevant. And your roommate has offered to purchase your old printer by paying 50. This is relevant. This is another option. Relevant. What you get 50 is relevant. What you pay 120 is relevant. Basically, net you paid 70. No. See, 2, 3, line 4 questions is what we did tonight. Okay. Alternatives. So immediately before coming tomorrow, just to browse through this chapter in the T world, just go through the text, understand, then be ready. Tomorrow we'll start the first application area, that is special order price.